Do you live in an apartment or a housing society, or are you part of your resident welfare association? That's your RWAs managing committee NC. If yes, this video is for you. We all deal with monthly maintenance charges. It's the lifeline that keeps our communities running smoothly, from security and cleaning to lift maintenance and garden upkeep. But when does GST apply on these maintenance charges? It's a question that can confuse residents looking at their maintenance bill or for RWA committee members trying to ensure compliance. So in today's video, let's break down the GST rules on maintenance, covering what residents need to know about paying GST and what RWAs need to know to manage GST compliance. Let's start with good news for most of the residents and smaller RWAs. Generally, maintenance charges collected by your RWA from you as a member is exempt from GST. Yes, no GST is added, but there's a very specific limit to this exemption. And as of now, this limit is 7.5k per month. Let's call this as the threshold. And this threshold is in effect from 25th Jan 2018 onwards. Earlier it was 5k. This is important for both residents and RWAs. What happens if monthly maintenance charge for a member exceeds this threshold? Now listen, if so, the entire amount becomes taxable for GST. And GST is charged not just on maintenance, even on one-time payments like for repainting or other capital expenses. Let's understand this with a simple scenario. Imagine you live in a 3 BHK apartment in Bengaluru. For May 2025, you pay maintenance 8k. Of course, this crosses the threshold, so GST is applicable on the entire 8k, not just difference of 500. Plus, let's say during the month you make a one-time payment for repainting 10k. So GST at 18% is applicable on entire 18k, so you'll have to pay 21 to 40. For RWAs, remember this concept at the time of invoicing. Another key factor, especially for RWAs, is that even if monthly maintenance crosses the threshold, RWAs may sometimes still not charge any GST. Why? This is where second condition becomes relevant, and that's related to RWA's annual income, aka aggregate annual turnover. If your annual income is up to 20 lakh in a financial year, this limit is 10 lakh for certain special category states, then no GST is applicable even if monthly maintenance crosses the threshold. And annual income here is the total money that the RWA collects from all sources in a financial year. Now, what do I mean by all sources? Let's understand this with a simple scenario. Imagine you live in a society of 30 apartments in Bangalore and you are part of the MC. For May 2025, on 25 apartments, you collect maintenance at 5k. This is within the threshold, so 1.25 lakh per month and 15 lakh for the year. On the remaining 5 apartments at 8k, this is more than the threshold, so 40k per month and 4.8 lakh per annum. In addition to this, let's say you earn interest on your FD, that's basically your corpus, 1 lakh for the year. So your annual income is 20.8 lakh. Now this is more than the threshold, so you'll have to compulsorily register under GST and also charge GST at 18%, but only on these 5 apartments. So for May, you'll have to pay GST 7.2k and also file returns once in a month or once in a quarter, depending upon the option that you have chosen. Now let's tweak this scenario a bit. Had the interest on FD was zero, that is if you had no fixed deposits, then annual income would have been 19.8 lakh, which is well within the threshold. So no GST even on these 5 apartments because annual income is within the threshold. So no need to register and hence no return compliance. By chance, if you are already registered, that is for GST registered RWAs, You need to remember this. If you register because your annual income and monthly maintenance cross the threshold, respective thresholds, then you'll have to charge 18% GST and file GST returns. This we have just learned. But what if later this monthly maintenance charge is reduced so as to be within the threshold, say from 8K to 7K? In that scenario, should you continue to charge GST? Or if you register because your annual turnover is more than the threshold, even though your monthly maintenance is within the threshold, should you still charge GST? Now, answer to both these questions is no, but you still need to file nil GST returns till you go for cancellation of your GST registration. And this has to be done irrespective of your annual income. So the crux here is, once you register, you need to keep track of these compliances till you opt for cancellation of your GST registration. On a quick note, for RWAs, if you satisfy both the conditions, you will have to charge 18% GST, but you can take the benefit of input tax credit. That is, GST paid on various expenses like security services, maintenance expenses, buying equipment for gym, etc. can be adjusted against the GST that you have to pay. Now, switching back to residents, what if you are lucky enough to have 2 or more flats in the same society? How does this 7.5K rule work then? Glad that this limit applies per residential apartment. Imagine you own 2 flats in the same society. You pay 7K monthly maintenance for each flat, so total 14K. Because the charge for each individual flat here is within the threshold, no GST is applicable. So take a look at your maintenance bill. If you are being charged GST, check if both the conditions are met. Understanding these rules ensures residents know why they are paying what they are paying and helps RWA committees ensure proper compliance and thus avoid penalties. This was all about GST on RWA maintenance. Hope it was informative. Thank you for watching.